There are literally millions of trading videos and thousands of strategies. Even with all that, you can have the best strategy in the world and still fail. That's because tons of people seem to overlook one simple thing: the math in trading. In this video, I'm going to teach you exactly what the math in trading is and how to win at trading using math. The core math equation, trading expectancy. All you really need to know is that your expectancy equals your win rate times your risk to reward ratio minus your loss rate. If your expectancy is greater than 0, you have a positive edge and you can be profitable. Your win rate is the percentage of trades that hit your target. Your loss rate is the percentage of trades that hit your stop loss. Your risk to reward ratio is essentially how much you're risking per trade versus how much you will be making if that trade hits your take profit. For example, a 1 to 2 risk to reward ratio means you're risking $1 to make $2, which is double your risk. So if your win rate is 30% and your risk to reward is 1 to 2, you can use that mathematical equation I showed you. Your expectancy would be minus 0.10, which would be under 0, which means that this strategy would be unprofitable. This is something that is not talked about frequently that I'm going to share with you guys because you need to know this. The silent killer, which is risk of ruin. So here's the math for it. Obviously, the real obstacle in trading math isn't finding a positive expectancy. That is an obstacle, but it's also managing drawdown. Risk management is very important. So this is another mathematical formula, which is required gain equals loss percentage divided by 1 minus your loss percentage. All this is saying is that when you start going into drawdown, you need to make even more, gain that loss back. So for example, a 10% loss requires an 11.1% gain to get back to break even. A 25% loss requires a 33.3% gain to break even. A 50% loss requires a 100% gain to break even. An 80% loss requires a 400% gain to break even. So basically, the more you go into drawdown, the more you have to make to get back to break even. So risk to ruin is very important. This is something that other people do not teach. This is why it's very, very, very important to risk no more than 1 to 2% of your equity per setup, especially if you're a beginner, or risk less, because this can happen. You do not want to have to gain 33% back or 100% back or even 400% back. If you guys enjoyed this video, make sure to like and subscribe and click the link in my description for my free ultimate trading guide. It's great for beginners, great for non-beginners. It's completely free. I'll talk to you guys in the next video. Peace.